Today we are going to talk about Japanese asset price bubble. What is a bubble? The bubble is in which assets have been sold much more than they were worth. In each instance, the prices rose and then abruptly plummeted. This phenomenon is called a bubble. In early 1990s, the total land of Japan was worth about $18 trillion, which was equal to approximately 5 times the US. However, compared to the situation peaked in 1991, the land of Japan was worth less than a half. But what causes resulted in the Japanese asset price bubble? Our story goes roughly as follows. From 1955 to 1973, there was an extraordinary growth of Japanese economy. The average growth of real GDP is 9.33%. However, in 1974, with the world productivity slowdown, Japan entered a low-growth rate regime. In 1985, Plaza Accord Agreement was applied. The Japan government decided to make Japanese yen appreciated against the US dollar. Let's look at the Bank of Japan, who played an important role during the bubble. Reacted the Plaza Accord Agreement, the Bank of Japan lowered discount rates 5 times and increased the money supply by 10%. There are some policies changes of the Bank of Japan. Before 1970, all financial institutions should follow the directly window guidance by the Bank of Japan. After 1970, Japan followed the trend of global trade liberalization. The Bank of Japan started to loosen the regulation of the banks. There were also some changes in the banks, which could be analyzed by 2 different time periods. Before 1985, commercial banks conceived large companies as main clients, who accounted for almost the whole business. After 1985, because the loan business from large enterprises decreased, the banks started to give loan to SME and real estate markets. It is possible for banks to lend money easily due to lack of prudential regulation by the central bank. There were some factors led to irrational behaviors made by banks, which were asymmetric information, weak credit assessment, and unreliable internal information. The banks still approved the loan application from clients, even though that they did not gather sufficient information about the borrower's ability to pay. It became very easy to learn approval from the banks. Some agents even didn't believe itself, but followed the others, just lended money easily to increase profits. However, because of tax system, which was designed to handle easily but sell hardly, led it to a transaction gap. Bubble is beautiful, which even made Japanese economy once exceed that of the US. However, when the bubble burst, it brought the lost decade to Japan. Too much questions appeared and made economy become worse and worse. The production was too much, which did not meet the lower domestic demand. Looking at commercial banks, all they owned numerous bad debt. The bad performance also happened in stock market and exchange market. Because of these, government faced pretty heavy debt burdens and went into a very long-term period of recovery. Now, let's see how the asset bubble can be explained from behavioral finance perspective. In conventional financial theory, the world and its participants are rational wealth maximizers. However, emotion and psychology can influence our decision, leading to unpredictable and irrational behaviors. Behavioral and psychology theories have been used along with economics and finance to explain how people are committed to irrational decisions. Some basic behavioral finance theories include overconfidence, overreaction and underreaction, confirmation bias and herd behavior. The first one is overconfidence. Overconfident investors believe that they will always win the stock-picking competition because they always make better decisions than others. Overreaction and underreaction can also indicate that investors behave irrationally. Specifically in overreaction, investors often react excessively to new information. This is because of fear and greed, which trigger stock prices to rise or fall significantly. Underreaction. on the contrary, means that when there is new information in the market, the stock price cannot adjust to it instantly. Sometimes, people do not recognize their own mistakes and try to find information only to support their initial ideas. This is called confirmation bias. Suppose buying a house, investors are eager to look for information to support their initial idea about investment, rather than look for information that could contradict it. The last one is herd behavior. It means people's tendency to follow the crowd as well as observe and imitate others' behavior, resulting in buying and selling similar assets. The development of the asset bubble can be divided into 3 stages: formation, expansion and burst. Let's use behavioral finance to analyze the reasons for each stage. First, the formation of asset pricing bubble. According to underreaction, when good news are published, market cannot react to it instantly. So there is a time gap between the publicity of information and price adjustment. However, arbitrageurs use the time lag to exploit differences in asset price and drive up the asset price significantly, which later start the bubble. In 1970s, Japan was very successful in electronic industry. It was crowded as the king of global electronics industry. Due to the economic miracle, along with the increasing value of Japanese yen, people were very optimistic and confident about the economy, especially for the land and the stock price. Investors believed that land and stock price will always show positive trend. Overconfidence made Japan in the emotion of euphoria, which led to the formation of bubble. The next one is the expansion of asset pricing bubble. During the bubble era, individuals followed the trend to invest in real estate, which led to imbalance between demand and supply, resulting in the booming of land and house price. In 1989, because of herd behavior, the total price of land in Tokyo can even buy the whole USA. Herd behavior in financial institutions also generated negative correlation with GDP and land price, a factor that might have led to the remarkable expansion of the bubble. This is very obvious in Japanese banks. During this period, the total value of loans increased by 5 trillion yen. It reflected the irrationally herd behavior. The last one is the burst of asset pricing bubble. Confirmation bias makes people hard to believe and accept the fact that they might be wrong. And they will soon realize, but it is already too late. So, we can see that irrational factors play an important role in the asset bubble. Thus, the inherent irrational defects of mankind have caused the bubble. So what is the impact of this bubble? The Japanese government later realized that the country is in the middle of asset bubble. They asked the Bank of Japan to do something. Monetary policy tightening implemented right before the bubble crashed, even though it was a little bit too late. Nikkei index fall by half in less than a year. The land value also followed to jump off the cliff. The number of non-performing loan increased as people facing liquidity problem. Tokyo's property assets price was 10 times higher before the bubble uninflected burst. It was managed to be listed as the most expensive along with Moscow's in early 2000s. As investments were increasingly directed out of the country, local companies facing difficulties to compete with import products. Consequently, Japanese products became less competitive overseas. Loan officers and investment staff had a hard time finding anything to invest in prospect that would return a profit. They deposited their block of investment in ordinary deposits. All these factors come together and it seriously dragged down the banking system and the economy of Japan. People freaked out and tried so hard to exit from the market by withdrawing their money. Many companies stopped investing and declared bankruptcy. Many banks forced to merge and consolidate their non-performing loans in order to survive and stay in business. It took almost 10 years for Japan to recover from the moment after the bubble burst, or also known as mentioned before, the lost decade. So, what can we conclude from the case of Japan asset bubble? People keep making the same mistake. Asset bubble that occurred in Japan is related to the overinvestment in real estate market. Everyone believes that the price of properties will continuously rise and that is an opportunity to make gains. People become aggressive and irrational when the market profitable. Higher risk investments are taken without adequate consideration that brought the market into failure, which means total loss. Many companies and institutions declared bankruptcy or relied on government subsidiary. Economists in Japan and overseas agree, the failure by the Bank of Japan and the Finance Ministry to act quickly in the early 1990s was the major reason for the lost decade. Finally, what can we learn from Japan asset bubble in 1990s? Even though it is hard to completely prevent bubble, but we can build a mechanism of self-restraint to analyze the market expectation. Bubble is not occurred suddenly. It expanded gradually and accumulating. It is important to conduct a monetary policy to maintain conducive sustainable economic growth. We also learned from the bubble period the importance of working on the policy agenda. It is important for the central bank to constantly express its views on key policy items. It is important to recognize the risk profile of the whole economy and to monitor credit creation behavior of financial institutions and understands how it impacts the economy. The fourth and last lesson from the bubble period is the need to design an appropriate institutional framework. Monetary policy influences the decisions and behavior of people. Finally, if financial deregulation from the government and Bank of Japan had been modified earlier to the changes in financial markets, the investors may have behaved differently.